Hey, welcome back, everyone. Today, I'm joined by Chita from TMG, the mortgage group, and we're going to break down some huge updates to the Canadian mortgage rules that everyone, every home buyer should know about. And good afternoon, Chita.
Hey, Serge. Hello, everyone.
I don't know about you, but I looked out the window today and I'm seeing all that snow and I'm going, geez, I just thought winter was going away.
Yeah, it's a winter wonderland there outside, despite the fact that it's supposedly spring.
Yes, we're officially in spring, but we're getting the snow. I know that the farmers are happy, and I know the firefighters are going to be happy but for us peons, we'd rather see nice blue sunshine and nice, clean, dry roads. Well, in the last 12 months, we've seen several changes to some of the mortgage rules. Chita, what are those biggest changes?
The biggest change, I think, I'll start with the one that's the most applicable to Edmonton's market. There's one that's also a huge change that's going to apply mainly to home prices in the larger metropolitan areas. But biggest change, and I'm already seeing clients take advantage of it, 30-year amortization. It's an extension from the maximum 25-year that was provided by insurers. So by extending the amortization, which is the life of the entire mortgage over a longer period of time, payments are lower. So borrowers, first-time home buyers, are able to get into a larger size home because of the lower payment. So that's one of the big changes that I'm seeing take effect, and people are borrowers are utilizing it.
So is it just first-time home buyers that can have the 30 amortization, or everyone?
No, so it's first-time home buyers, but so someone who's never owned a home, but anyone who's never owned a home in the last 4 years can reset themselves for a first-time home buyer as well. So they'll be eligible, and then also anyone who is I guess in a marital breakdown. So whether you are common law status or you're married, if there's a marital breakdown and you're exiting a marriage, you can also be able to get 30-year amortization with just 5% down.
That 5% down. Okay, so that 5% down is to what purchase limit?
500,000. So 5% down on the first 500,000 and 10% on the remaining. And so this is a great segue into the second rule, I guess, government changes recently is the insured amount or value used to be capped at $1 million, and now it's 1.5 million. So meaning that if you wanted to go up to 1.5 million, you would put 5% down on the first 500 and 10% down on the remaining up until 1.5.
Yeah, that used to be a much higher down payment requirement, wasn't it?
Yes. Anything over $1 million was not insured, right? And anything previous would be in what we call the sliding scale after $1 million. So you do 20% down on the first $1 million and then 50% down on anything over and above. So the down payment requirement was very hefty before. So now with this rule change, I guess borrowers in the Vancouver, Toronto, and now we see Calgary, those kind of markets, there's a lesser down payment requirement.
Mm-hmm. Now, the 30-year amortization, that's been expanded for all first-time home buyers. I'm seeing we're talking about something about the 2024 budget commitments that allow 30 for first-time home buyers. Okay. Now, I understand there's been some down payment initiatives that have been changed. Yes.
So with our home prices increasing all across Canada, we're, I guess what's happening is the young generation, it's very difficult for them to get into a home. So in trying to save up the down payment can be challenging. So the government has rolled out programs like the First Home Savings Account, which is tax-free money, going in and tax-free coming out. So that's $8,000 a year up to $40,000 for the lifetime. So that's one initiative. The other initiative was the RSP, limit used to be 35,000. Now it's gone up to 60,000 per person to be able to withdraw the down payment from their RSP. That will be tax free.
Okay, so when they borrow from their RSPs, when are they required, and how are they required to possibly pay that back?
Yeah, it's so it's a 15-year time to repay back. So trying to break the how much they borrowed over a 15-year annual amount to be repaid back every single year until it's all paid back. So something that can be done in repayment, or what the accountant will end up having to sort out by the end of the year.
So from what I understand, you have to pay, say, 1/15 of it back every year. If you don't, that you're then taxed on that amount as additional.
Exactly. So it's basically broken down over 15 years, whatever you borrow. Correct.
And I think that used to be you had to start the following year, but last year they came out and said we had another year before we had to start.
Correct. They give you a little more time for an extension to pay back, so it doesn't have to be immediate. Correct.
So that was for the people maybe taking that withdrawal last year. But the people who take a withdrawal this year, do they have to start paying the following year, or they have that 2 year before they start putting money in?
They should be given a 2-year grace period to be able to pay back.
Okay, awesome. Now, I often run across young couples that tell me, well, hey, I've got a family member, a parent or grandparent that wants to help me with the down payment. What are the rules that pertain to that?
Yeah, so gifted down payment. So anyone with a family relationship, so grandparents, aunts, uncles, right? Any, mom, dad, siblings, they can gift any nominal amount to the potential borrower. And so it's just a matter of signing a gift letter, or the gifter and recipient signs a gift letter that this is a true gift, and there's no repayment as part of the gift. So it's very common now, especially with the prices being higher, and we're noticing like family, it's almost the fact that there's a lot of help from family that's required sometimes to be able to get young people into homes these days.
Is there any kind of restrictions to the amount that they're able to gift, or?
No, there's no. So typically the paperwork requirement is a signed gift letter and just bank statement showing the money's been deposited into the account. We don't need a history. But when you get to a higher gift amount, so I mean, each lender has their own, I guess, amount that they would require for the gifter to prove, source, meaning like showing that there was where that source actually came from. So when you're looking at maybe like $100,000 gift, the bank can actually go back and ask for a gifter's, statement to show that the funds, had been sent from that account. Okay.
Now, I also get a lot of inquiries from people that are new or newer to Canada, as far as, geez, I may not have a credit rating, or, what are the rules that pertain to people that are being possibly new to Canada?
Yeah, so jumping into new to Canada, so we're definitely, I guess, in this episode talking about trends that we're seeing, right? So trends is the government's programs that they've rolled out, from the higher cap on the mortgage amount for insured mortgage, as well as increase, like the down payment initiative. And the last one that they've I guess really rolled out a more lenient program for is the New to Canada, and all of it is tracking the data of, home prices are going up. There needs to be, an ability to be able to pull up more money or save up money for down payment. But we're following the immigration trend because we're, receiving a record number of immigrants coming into Canada. And for the Alberta market, there's a net, like we are gaining a lot of interprovincial migration, because our housing prices are still considered reasonable compared to the other metropolitan cities across Canada. So the New to Canada program, the government, because the program's been around, but I know that what has happened over the last few years is the requirement has lessened, right? So it's become more friendly to be able to get easily into a home. So one of the big challenges previously was New to Canada, depending if they're not coming from a Commonwealth country that typically has a credit bureau, right? So we have to establish credit. So now credit requirements is only 12 months, bank statements from a recognized financial institution here in Canada, even a letter from the bank, any billing, a 12 months billing cycle is required. And that's for a 5% down. If it's 10% down for new to Canada, we only need 6 months. So the credit requirement has definitely lessened significantly for the new to Canada program.
Now, what about it? If they're coming in, a lot of them are here on a work permit. And how would that possibly affect their ability to qualify?
Yeah, so anyone who's permanent residents, we can, do a mortgage for anyone who's a permanent resident and a work permit. So the work permit requirement is there has to be 183 days left on the work permit to be able to qualify for a mortgage. So we definitely look at we look at the paperwork to ensure that they will be able to, they're going to still be here for the next 6 months.
And do they have to be employed in that position for a certain period of time?
Yeah, so standard is we were looking for a minimum 3 months full-time work status, unless there's a relocation. So when when you have immigrants who come in from a Commonwealth country and, the US, the UK, it's a relocation, and we recognize, that country, and there's no minimum at that point, as long as if they have, their position here.
So do you think we've covered all the bases here as far as all the new changes and the effect as far as mortgages and as far as down payment as well?
Let me take a look at my paperwork. I feel like we have so new to Canada credit, the big changes, just making it easier, and then and also the big change, because previously new to Canada, the down payment requirement was minimum 5% down from own sources and own savings. Now the 5% down or any of the down payment can be gifted from family, right? A familial relationship. So that has been lifted. And so again, making it easier for new to Canada to get into a home. So the new to Canada program has definitely improved. Then the 30-year amortization that I'm already seeing borrowers use, and then that 1.5 million cap. Well, I guess in Edmonton properties, we're not quite there yet, but I definitely know the Vancouver and Toronto markets, they've already utilized that.
Mm-hmm.
So yes, those are the big changes.
Right. I know we discussed this in a previous episode, but for that first-time home buyer, again, they're still trying to figure out how to acquire their down payment. I think there's a possibility of even 100% financing or borrowed down payment. Can we maybe touch on that a little bit?
Yeah, so there's always been this niche program. We call it a flex down, meaning you can borrow the down payments. The 5% can be borrowed. So if you have a line of credit, right, you can borrow from it. But the applicant for that program has to have strong credit to be able to apply. And then also you have to have the income to support not only the mortgage payment that you're applying for, but also the down payment. So you're borrowing from a line of credit. You have to debt service that payment as well. So there's an income as well as a credit requirement. It's a very niche product. Not every lender has it, but ultimately that is what we have. That's 100% financing, because there's no actual, do you know what I mean? There's no down payment required because it's all borrowed.
Mm-hmm. Okay. All right. Well, I think that covers pretty much everything that we wanted to cover today about the different rule changes that have occurred recently in the last 12 months or so. And we hope that you found this information helpful. Again, if you're thinking about buying a home, the first step is always getting a pre-approval, and Chita is here to help. You can see her number here is 780-932-2225. Give her a call. She'll gladly answer any of your questions and help you with your home purchase. Other than that, I want to wish everybody a great day and take care. And bye, Chita.
Bye, Serge. Thank you. Bye, everyone.